Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 6th of April. All right, now through the weekend, it's always a bit of a mystery what we're going to get. And once again, the things haven't disappointed. Boris Johnson, they're sort of attributing the sale or the sell-off in sterling to Boris going into hospital after 10 days. I'd say that's precautionary at best. A lot of hype here from the media. Okay, really bad week for coronavirus deaths in the US. They're really plugging the whole fear factor. So keep an eye on that. And outside of that, you know, there's obviously oil's bounced back. So oil's back in the news. Saudi Arabia delays setting May prices. Looks to OPEC meeting to settle price war. I don't know where the price war comes into it. That's the biggest cartel ever. And that's where we are, right? So there's a bit of a mixed bag. Now, you throw that in amongst what we had last week on Friday. Let me just change screens here. What we're looking at is the US employment numbers, right? So we were expecting a bad number. Unlike let me just go up a touch. Unlike the weekly jobless claims, right, which is a different stat. That's updated weekly. And we've seen the massive spike here. Now, the non-farm payrolls is collected monthly. So the bad numbers, which was the worst end of the forecast was minus 4 million, didn't come through yet. But next month it will for sure, right? The unemployment rate blew out a bit. I would expect these to go up towards 6, 7, 8% next month. And this claim here to be up around 6 million as well. We'll see how that filters in. But so the market was expecting really bad numbers, and I was expecting potentially bad, but knowing that they hadn't had enough time to get the data in, that it may not come through that bad. And what that does is it creates a number of different weird events. We've got all the news, right, from the weekend and from Friday, and I'll show you in a second. Trump's been sort of talking about, had a speech saying, you know, we're getting on top of things. Then there's a mixture of, spike in cases and deaths and all these sorts of things. So it's pretty hard to work out where price action's coming from. But what the end result is, and if I just come over to the risk on, sort of risk off page is identifying what is actually happening right now. Now, obviously, US equities closed Friday down 1.69%. Okay, weak non-farms, etc. Probably not enough. Well, it actually wasn't as weak as people were expecting. So equity markets have probably come off because it means the stimulus that they were hoping for and those really shocking numbers didn't come through. Still enough to push it down. Now, as I said, Trump was coming out, bit of a speech talking about they got some other hydroxychloroquine or something, you know, a whole heap of different things they're doing, measures they're taking. Anyway, the net result was sort of positive. And you can see the Japanese equities a little bit higher, the Chinese ones sort of lagging. The yen pairs or the risk on, risk off pairs, well, you know what, they're slightly up. There's been no major fluctuations there. Gold, okay, pretty steady. So I think we're going to see the European equity markets open up. Well, they should be a little bit positive on the back of the Asian equities. I would expect just keep an eye on the FTSE, right? So FTSE with Boris, you know, the leading light for the UK in hospital. That could be something to look at going forward. Now, so that aside, right, so it's very hard to see. It doesn't look like there's a hell of a lot going on. So the market's trying to work out from those non-farm payrolls and from the news, should we be buying or selling dollars at this point? Well, I can tell you it's sometimes very hard to see, and that's where the dollar index comes into play. Okay, you can sort of see here, we've sort of had a bit of a rally on Friday. Now, if I just come in and zoom that in a bit, but check out the price action here, and you'd expect this without the North American session starting for the week. Okay, we're in the Asian session still. It's just trading sideways. We're waiting for the equity markets in the US in particular to kick off, and then we'll see what the dollar does. To me, and I was calling this well ahead of the non-farm payrolls, I think we're going to see dollar strength from here. I expect this thing to keep going up. And what we're going to need for that is weaker US numbers. Right, we've got the jobless numbers coming out again on Thursday. That's probably going to be the leading focus. You're looking at a lot of these currencies, a lot of false breaks here. This is dollar yuan, you know, not a hugely great trading pair by any stretch, but you just still sort of banging away within recent ranges. And a bit of a mixed bag here on the major currency pairs. And that's a little bit confusing with some pairs up, some down, et cetera, et cetera. So on Mondays, we come into the markets, we're looking for opportunities. I can tell you it's not the greatest day to be trading. In fact, it's probably the worst of the week. Now, saying that, I'm sort of starting to get a bit more clarity around some of these pairs. Aussie, Kiwi, Euro have got really good technical shape. You can see sterling sort of broken down a bit, but just trading sideways. I think this is doing its own thing. Dollar CAD sitting within the range. Oil back to $27. That's a pretty big move from oil. And we're starting to see dollar yen just trickle to the top side on a bit of dollar strength, right? And that's US dollar safe haven, not the yen safe haven. So when does that change? Well, it just happens when the market decides that the US dollar, this has become too big a problem. The US dollar becomes the safe haven as opposed to issues elsewhere where the yen can come into play. So that's where we are at the moment. I think, if I just kept bringing it back to the daily trade routine, our daily trade routine, having a look at where, piecing it all together. Okay, you've got the trading conditions, well, pretty average. Ongoing geopolitical events dominating price action, and obviously the coronavirus is the main catalyst here. There's no surprises there. But what I've got in here is some pairs that have pretty clear technical direction. Euro down, Aussie and Kiwi down, and dollar Swiss, as you'd expect, with Euro going down, it going up. Now, there's no major driver at this stage, but they do have clear direction. Now, the pairs that are sort of lacking direction, but which have some sort of levels close to market, are dollar yen, dollar CAD, and sterling. Now, when you try and piece together where the action's going to come from, well, you're looking through the calendar. Of course, there's I don't see any value in a lot of this data. The Bank of Canada Business Outlook, I can't see that being particularly good. I wouldn't be surprised if the Bank of Canada sort of pushed that back, because Business Outlook, cloudy with a chance of rain. I mean, it's not rocket science we're sort of talking here. Then you got the RBA rate decision and statement tomorrow. Now, the RBA have got a little bit of firepower up their sleeve. Will they cut rates? Well, I don't really think they will. And this is where you can come back into Reuters, right? And I was just checking this out before. You're looking at, where are we? Where's the RBA? There we are, 0.25. Okay, no real, well, there's no data there at all on Reuters. I did see something the other day, but I don't probably think they will until it gets worse. Get the FOMC meeting minutes. Okay, not a lot. Kuroda speaking in Japan. Employment numbers out of Canada. Now, that's usually a good one, but this is the big number, right? This initial jobless claims. Now, this became a prominent number, and it was inconsequential beforehand around the global financial crisis, because it gives us a week-to-week number of the employment claims. It's a better number for the market to sort of, or trade around. So keep an eye on this. This is going to be the key focus, I think, for the week, keeping an eye on how those jobless numbers really do sort of knock around. You got some ECB monetary policy accounts. Don't forget, we're coming into Good Friday. And funnily enough, we do have US and China. I think they're scheduled CPI numbers coming out. So will they impact? I don't think so. So don't even worry about those. You're really focusing on the raw nerve. And at this stage, it's the amount of stimulus that is in the US, and that is coming from employment. Now, we should start to see the numbers really blow out exponentially. I mean, from 3.5 to 6.6 million claims, it's got to be up towards 20 at least. So we'll see how that plays out. Now, we've got 3 days before that comes out, so don't hold your breath. But focus on the pairs that do have clear direction. Okay, that's the active pairs. And hopefully from there, we can piece it together. As I said, if you're coming into trading on a Monday, and I've seen a lot of traders just basically open up their accounts just to start trading, like Monday, first thing on Monday morning, like as if you've got the magic answer. I don't get it. Smart trading, wait for direction, wait for the momentum to kick into the market, isolate the pairs that do have a bit of direction, and then hopefully you get a bit of a result. So I'm just sort of changing a few dates here on the correlation matrix as I go through that, just trying to isolate a bit more of a shorter term numbers here to see what's moving what. Now, and you're sort of starting to get S&P minis, okay? Dollar CAD is moving with that. And you've got Kiwi yen and Aussie yen moving as well. But it's probably not enough data to get all the numbers here. If I just take it back a couple of days, let's go back over to the 27th. All right, guys, so that's where we are, right? So there's, as I said, the market is just coming together, especially after the weekend. If I just bring you back over to this is what you got to understand. When you come back after the weekend, right? A lot of traders keep asking us, can I trade out? Can I keep positions open over the weekend? I'm like, no way. Look how much weird news there is out there. In this day and age with coronavirus, I mean, outside of that, there's a lot of geopolitical events. Now, I have an easy response. A quick response is, can I trade your cash over the weekend? Because I'd love to just go massive, long or short and hope for the best. And that's all you're doing. So what we're going to do is we're going to wait for the market to factor these events in, okay? The movements in oil, the propaganda here from the media about, upcoming worst week ever. All these sorts of things need to be factored in. And if you have a look here, you can come back through and actually go down, have a look through Trump's speech here. You've got all the various components here about his speech and how he's trying to sound upbeat. And I don't know, he's trying to sound sincere, but it doesn't really sort of work because you sort of know what he's all about. But anyway, that's where we are. So trading, okay, take it easy. Plenty of opportunities this week. I think you're going to see some really good opportunities, especially around those US jobless numbers. To me, that's going to be the big event for the week. All right, guys, have a good one. Cheerio.